Well, let's talk about the noise first. So
Yes.
why don't you tell me, what does the noise mean?
The noise, which is not the hard economic
Correct.
data.
I'm
The
not-
noise
but
is the
let's-
banking problems
Yeah.
and the perception that that could be a bigger issue for the global economy, not just in the US or with Credit Suisse in Europe and Switzerland. Obviously, we want our banks and financial institutions to be soundly based. They are actually the gearbox of the whole economy. And when we get sand in the gearbox, it stalls, breaks down, and we have a recession like we did during the global crisis. That was a classic case of the global financial banking crisis.
Which is something they want to avoid.
They want to avoid that because it leads to recession, high unemployment, business failures, and nobody wants that. So when we started getting that the banking issues emerging in the US, there was this, what's it mean? Is it just a relatively isolated instance confined to a couple of banks who were frankly poorly managed, or was it something that was like permeating through the whole banking sector? And now, as we sit here now, it appears to be just badly managed small regional banks, or relatively small regional banks for the US. They were poorly managed. They didn't manage their asset and liability match. So when they bought all these bonds with very low yields and they had to sell them as yields went up, they realised losses as people withdrew their money.
It was only because,
And they failed.
but Steve, it was only because there was a run on them.
Correct, yes.
If they had just been normal day-to-day operations, they wouldn't have had to sell these bonds for a lower value.
Correct. And they could have hedged them. And the good thing about how a lot of the bank treasuries function in Australia and other banks around the US and the world for that matter is that they hedge these risks.
They hedge the interest rate
The interest rate risk. You know, everybody knows that, well, we know that rates have been going up for about a year or so now. And the prudent treasuries within the banks would be managing that risk. Now, sometimes they take a bit of a haircut. They lose a bit of money because they did buy the low-yielding bonds, and as they hedge it, it does cost them some money.
It's expensive.
Yes, but it doesn't. It means they don't fail like the Silicon Valley Bank.
So just stop there for 1 second, if you don't mind. So it would sort of mean, from my point of view, at least, the decision. They knew that they should be hedging, but the decision not to hedge sometimes is a P&L issue. In other words, the cost of the hedge in the middle of a rate rise period where rates are going up at faster speed than we've ever seen before, which is what has been happening, then therefore the cost of the hedge is crazy, and to some extent the cost of the hedge is prohibitive, and it makes them look really bad.
And they lose money,
so
and
they don't
their shareholders get very cross with you.
Correct.
Yes.
But the good thing is about it is no one loses any money. They just get pissed off.
Yeah, and you have 12 months of pain until the next interest rate cycle turns down, whenever that may be. We'll talk about that a bit later if you wish. But, so it's really just managing like any person with debt, like a mortgage holder, like a business holder with an overdraft. This rate hiking cycle means that everybody who's got a loan, who's got debt, is paying more than they did a year ago. It's a similar thing for these banks in the US that didn't hedge against that risk. They didn't prepare for this risk, and they got caught out and they got burnt. And and when that happened, of course, the immediate reaction of financial markets is to think, oh my goodness, is this systemic?
Yeah.
And
everybody's got the same problem.
Correct. Has everybody got this problem? And, there's a lot of kerfuffle. I'm spent over half my nights awake watching this equity market, the US stock market, bouncing up and down massively. It appears, though, that it's not systemic. It appears confined to a few players. And we've heard from the Federal Reserve and the US Treasury, Janet Yellen. They're going to, I won't say bail out the banks because they're not going to do that, but they're looking at the issue, ensuring that the banks get their act together and that there's no duplicate of what happened to those other two banks.
In other words, you got to go knock on everyone's door and say, show us your position and we'll tell you what you got to do.
Be bushfire ready.
Yeah, correct.
Yeah.